my view, definitely. Well, when we say the Magnificent Seven stocks have run out or become expensive, we're actually talking about a spectrum. On the higher spectrum, you have the likes of you have the Nvidia, which has run up to almost $1,000 a share. Now, for me, yes, that has become very, very expensive, and that is become, unattractive to me. But if I were to look at the other spectrum, you have the likes of Google and Tesla, which is still quite affordable. Tesla last closed around 160-ish price point, whereas the fair value of Tesla is assessed to be in a region of 150. So I would say that the fair value versus what was the last price or what's the current price is not too far off. I would say it's quite an attractive proposition in terms of having some of these stocks in my own portfolio. And of course, the other stock I mentioned about is Google. Google last closed at about 140-ish, whereas the intrinsic or the fair value is assessed to be around 125. Again, not too far off in the gap between what is the fair value versus what is the current market price is not too wide. So I would say that yes, these are the two stocks that I would seriously consider having or investing into as part of my own portfolio. In my view, there is never a good time or a bad time to buy. It's about knowing what works for you or what is your investing system. My own investing system is using options, using instruments like option to help me enter or to buy into a stock at potentially a lower or better, more attractive price in the future. So earlier on I mentioned that Tesla is around 160-ish, Google is about 140-ish. So what I will do is I will use instrument like option, and then I will sell short puts on option for these two stocks. So, and I will sell it out of the money. In other words, if let's say Tesla is 160, I'll probably sell it 150, 140. So in event that the stocks of Tesla or Google actually drop in the future, I will be able to buy it at a much lower price in the future than having to buy it today outright at this price points. Now that's it for investors who do not use options or instruments like this. Of course, you have to do a bit of work by monitoring the market to see in terms of intraday price movements, if the stock price of this counters have actually dropped to a level that is comfortable for you to enter, then I'll say that yes, you can still buy it today, but you probably got to do a bit more work by monitoring the market. Well, the bad news are almost always driven by sentiments, not always based on facts. So yes, while it's true that Tesla sales have not been doing as well as projected, but if I look at a long-term a potential of electric vehicle as a sector, right, I would say that there's a lot of tailwind that's going for this EV sector. Climate change is a very clear and present danger. So the world is going to pivot towards cleaner energy platforms, and Tesla is just going to be sitting in the right place. The fact that Tesla has dropped to 160-ish price point today vis-a-vis where it was at the start of the year, where it was 200 plus. End of last year was about 250. It is screaming, buy me, cheap. I'm cheap now. So I'm just going to pay attention to what the market is telling me. I'm just going to enter in a little bit of positions into Tesla, and when the upturn comes, I think I will be in a happy position to enjoy the upswing when it does come.